Hey guys, this is Jonah with ForexRazor.com. Hope everybody had a happy new year. And we're just going to take a recap here of what we did today and look at try to figure out what's going on here coming into next week. Guys, a couple things to keep in mind. We've been in low liquidity for about the last week and a half. Holiday times have been upon us. A lot of bank traders step away from their desks. A lot of the banks are closed on a lot of these days, and because of that, got really choppy markets. That should start dissipating starting Monday. So today we're looking at January 2nd, 2009, and this is Friday, guys. We took several different trades today. We started off the day trading this gap, which you can see right here, guys. This is the gap from the open on yesterday's, or should I say early this morning's European session from Friday close. We had a huge gap of roughly about 80 pips here. And what we did, as soon as we saw this thing starting to retrace, which typically, this is something to watch for, guys. When you see big gaps like this, they almost always fill. And what I mean by fill is that they come back up to the price, and then a lot of times they'll reverse. So as soon as we saw this coming up, we went ahead and took a long and got a nice 2-to-1 trade on this for 40 pips. Not bad. Obviously, could have gotten a little bit more here if we would let it run. Probably could have got about 60 or 70 out of it, but we weren't complaining about 40 pips. We also took several scalps throughout this throughout the day here, throughout the session. We did a 3 a.m. session, and we traded for about 3 hours, and we took 4 or 5 scalps. Also traded some economic data coming out right at 10 o'clock with the U.S. ISM Manufacturing Index was a pretty negative number, and for once the market actually did respond to that negative data. You can actually see that right here on this release. This candle is the release from the ISM Manufacturing Index that came out. We got in this right at the bottom, right here at 39.20. Very nice entry. It stalled here. I mean, it was available for probably a good 15 or 20 seconds before it decided to push its way up. It's a pretty negative number, so we went ahead and got involved and rode this up for a nice 20 pip move. Could have gotten a little bit more out of it again, but we were only risking 10 pips. All in all, guys, a very, very nice day. I'm not going to complain of starting out the month or the year with a 2.5% day. And hopefully we'll have more of those coming this week. As far as the outlook here, guys, as you can see, we are trending down. This is a 15-minute chart. Let's take a look at a little bit longer term time frame here. Here goes an hourly, and you can see, all in all, this thing is trying to bottom out and make a double bottom right around the 38.50 level. Now, I'm not buying this 100%, guys, and the reason I'm not buying it 100% is because of the low liquidity. So my outlook on this thing is to wait until Monday of next week and kind of let the market tell us what's going to happen. I believe we're probably going to start seeing some dollar weakness, see the euro move up. But what you see right now is really too hard to base anything off of. I would not take what we see this week and say that the market's going to trend based on that by any means, because like I said, I would say 80% of bank traders are out of the market right now. So what we're seeing is a few guys push the market around. They're pushing big orders, and they can really manipulate the market. So Monday we'll get a true feel from where the market sentiment is and which direction we're going to head. Let's take a look at the pound USD real quick. Alright guys, looking at an hourly chart here on pound USD, you can see that we've moved down significantly. Again, we've seen dollar strength across the board. You can see right now that we have this is the 100 SMA right here. It's been offering resistance through this level and still is at this point in time. But again, guys, I would be inclined to think this is going to move up. We've made new lows, but you can see that these new lows that we've made are somewhat artificial, because normally when you make a new low on a major scale, and we're talking about breaking yearly lows here. Well, of course we're into a new year, but we were breaking yearly lows there in December. You normally get follow through of at least 200 to 400 pips. We didn't get that, and the reason is because it happened during this low liquidity time. So again, outlook is to let the market tell us what's going on. I do think we'll see dollar weakness. I am looking for dollar weakness, but I'm not willing to take any kind of trades until we get into next week, because we're going to let the traders tell us where the market's heading and where the sentiment is, because the last week, guys, you really can't tell from what we've seen where we're heading. So again, we're kind of scalping the markets, waiting for a trend to start, looking to get into something that we can hold for a little bit longer, maybe even play around with some options for some longer term holds once we get clarity and direction, guys. So that's it for today, January 2nd, 2009. Hope to see you back here for next week, and hopefully, guys, we'll get back on track, get some good markets trading, get some better spreads. Depending on your broker, you've probably been dealing with some spread issues, and to get back to normal life, guys, as Forex markets pick back up. So, guys, have a great weekend, and again, Happy New Year.